9/2 of 2013, we have before us a famous company called Google. And why do we like Google? This is a 3-minute, 60-minute chart on Google. I'm also going to show a daily chart, but Google has sold down and it's oversold going into September in the very short term of price volatility. Short term, it's oversold. Of course, it can sell down a little bit lower, but unlike Netflix, LinkedIn, and Tesla, they're the opposite of Google. This is the bellwether stock, Google. And believe me, in the calendar month of September, the other broader stocks will catch up to Google. It's sold down off of these all-time multi-year highs right up here at 928. And we are hitting the lows in the month of August. Google has sold off at every high and made lower lows all the way down in this calendar month. And going into September, I will tell my MMTs and the rest of the world and everyone else is that we're going to hit we've had some great trading ranges where we made lows over here. Let me just give some of my MMTs. We were trading it when it hit the low here, 856, and it traded right up to the same high. It traded right up there to 878. And this is on a daily chart. And that was 1, 2, 3, 4, a 5-day counter trend before making the lower low. So when we're buying the call contracts, we have to know that we're only going to get so much power out of Google, but Google is oversold on a daily chart. This is the MMT platform. When we made the first major low here, which was done on 7/22, that low was 875, and we popped it right back up to 913, and that was on 7/23. Okay, from 7/23, if you didn't sell and it was in a range, they dropped it from that high of 913 right here back to these lows right here of 880. And then look at this pop. We have another great rally. 1, 2, 3, 4, 5-day rally back up to 907. And then we put in the highs right over here on the calendar month of 8/6. And I remember I said, hey, there's the lower high reversal. We went from 912 right down to these lows of 856. We had another 1, 2, 3, 4, 5-day rally when I went over, but we made a lower low. So in the short term, the call contracts that we're going to be looking at are going to be an 8:45 September regular call. What I'm going to do is put this time frame on a daily so you can see it clearly where we are at the wholesale price on this call. This call right here is down toward its all-time low. So when we're buying based on that reversal, it's an 845 call, and it's right at the strike price. They have taken all the call premium out of the bull, and that means that the put side would be way up here. So we're going to look at how we can steal this price. But when you buy them, they hit the low. Here they hit a low of 28.20 and traded up to 34. There was a $6 move. So we're buying low dollar risk entry based on the deflation side of the put side of the market, the put side being at the high and the call side of the market being at its lows. I'm going to give alarms on the September call. It's a regular. It's not a weekly. It will expire the third week. Another one we're going to look at is the 840 call. And if we drop down and so the 840 call is down here. It was way up here at $90 on Google. We're totally wholesale based to capital risk. We're market makers in one good thing. That's the option pit. And how do you get involved in the option pit? Well, it's a very, very serious place to be because you're going to do well, because when you're getting your entries and you just click on the SMF options exchange right there, hey, and the page will load. We give trading capital to people. We do all kinds of things. Take the 1 day trial in that option pit. Watch us steal the low while everyone else owns them at the highs, and why our risk entry is lower than everyone else's because we're always wholesale. So if they drop this thing down here tomorrow, on the first trading day on September 3rd, we're going to bounce off of support levels very quickly. So we're going to see if we drop down slightly below the 840, that'd be about $7 lower where the price of this contract would go, and I know exactly where it would go to the penny. And I'm going to tell my MMTs to start setting alarms. If we do sell down, set alarms lower. Set the lowest alarm at $15.50. Give me another alarm at $16.70 and another alarm. Just remember that it closed at $20.41. Give me one at $18.60 falls due. That's on this particular 840 call. I will go through the 840s and the other part of the trade management scenario. Google on a daily level is oversold. When we take a look at a public chart versus the MMT platform, the market maker platform, options, we're great at those. You got to get in that market maker. And the equity, we teach them both. We teach a lot more than that, but you can deploy the capital intraday. Here is where we're going to see if we can come down and test this area. It's going to be right over here. Right where my pointer is. That's in that price. So this particular area is where that gap up started. Once he cleared it, he ran and made a high, but look at that correction. Now, this correction's been going on for a while here. So, we are oversold on a daily. When I look at a weekly chart, I already know what the public and the algorithms are going to feed off of, and they're going to feed off of that %K. And it looks like oh my goodness, it's the time to buy off the bottom. That thing got down. See, it's not overbought. When Google was up here at 100, that's when we were up here at the highs. That's the time to get net short. But we don't make all our decisions on that. We use our own platform, but this is what the public looks at. What I'm saying is that we're going to bounce off the bottom. When that thing hits support, we're going to bounce where the broader market of the high beta in the NASDAQ 100 could be selling down, like the Teslas and Netflixes, and there's a few others in there, the LinkedIn, and there's a few more that are way up at their highs that have not followed Google's pattern in August. September is historically a very bad month, but why could we come down and bounce off support and go higher and buy the calls? It's very clear why we can do that. The calls are deflated in price. The complete call side. Now here, just let me show you a put option when Google reversed. Let's take an 875 put. Throw it in here. These puts were on sale at $10 and they ran up to $33. So the put side's going up in price where all the calls were falling. So when Google fell below 875, there are certain puts that are getting way up here in value where the market will have a turn and the puts would come down and then the calls would do what? Go up. Based on the daily chart and that Google has sold down. It's the leadership in the NASDAQ 100. It's been pricing in going into September, a bad month for September, and Google in itself has been pricing that in. That money off the sideline is going to try to buy the dips. So we only like to buy them when they're oversold to go long. When they're overbought, we like to sell short. There is a big trade using the calls at wholesale entries. They drop these in value. You can see at time when the calls, when Google really gets ready to break out. The last time that we had this, and we remember it well, this was on 418 when these got on sale down here at $15.50, and they went to the roof up here to $88. I didn't say that this particular move over here is going to be like this one, but it's still relative to the market maker training that you get, and when you buy them, you let them keep going as far as they want to go. You made a fortune there. And, the thing about it is it's on a daily level. When I look at the 60-minute level of the calls, we can see that they were at $30 on the high and they dropped $10 in value here. So we're buying wholesale. That's why it's good to be with SMF and that market maker division. Get started on a monthly level right now. Do what we do. That's what you want to do.